Hello everybody and welcome to this week's Motor Trade Radio podcast powered by eBay Motors Group. It is Saturday the 11th of June and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson. This is episode 29, season 8 of Motor Trade Radio, bringing you all the chatter that matters. Once again, we've gathered together this week's big car retailing stories across the franchised and independent sectors for you to enjoy all in one place, on demand, on your podcast feed.
So, how's your week, Curtis? Because we had this 3-day working week last week, which is great because we got 4 days off. Unfortunately, that doesn't give you... You've got to sort of catch up this week, haven't we?
A
busier week.
I rather suspect, like you, I've been playing catch up a bit. Yeah, those 2 days off were great, and then leading into the weekend, great. This week, everything's been sort of on fast forward a bit.
So I do 2 weeks worth of work in 5 days, I think, at the minute. But it's. But to be fair, it was great. I think we had a mixture of weather. I think depending where you were and where your celebrations were or parties or whatever you were doing. But I hope everyone had a good weekend, I think.
Yeah, no, definitely. And it didn't rain on my barbecue. Did it rain on yours?
We got a bit of rain on the Sunday, but it wasn't too bad. Yeah, I think there was some stayers out there. I went for barbecue on the Saturday night, which was nice, and rather than the Sunday afternoon. So I was quite glad I made that decision because Sunday afternoon was a bit wet and windy around here. So, but no, it was good. But we have got some brilliant shout outs this week, and the first one is that we are now going into the. Can we say government? It is the government, isn't it? Essentially,
it is the government. Yes, yeah.
So it's so the Department of Business, Energy. Get this right because there's about energy and industrial strategy are now sharing the podcast across the DFT, DIT, and the DA. So the dissolved administration. So that's another 250 listeners there that we'll hopefully be speaking to this morning. So good morning to you. If you are tuning in, you have subscribed, and thanks for tuning in. And hopefully you'll find our weekly podcast interesting and insightful.
Yeah, but please like and share on social media, and it'd be fascinating to hear any feedback that you guys have to the podcast.
Definitely. And this week we have got an exclusive today. So from our sponsor eBay Motors Group with the preview of its May market review, obviously analysing of pricing, stocking and days to sell across both the franchise, independent and supermarket.
And if you haven't already listened, then do catch up with our special interview last week with ICDP boss and leading industry analyst Steve Young. He was talking to Phil and I about agency model, multi-franchising, car supply, and also 5 used car trends to watch out for over the next 5 years. So what we'll do is we'll include an excerpt from that interview in today's show. But that actually went down really well, didn't it, Phil?
It did, yeah. It's had a great response. I think Steve was panicking. He was going to be in competition with the Jubilee, but to be fair,
yes,
a lot of interest, a lot of listeners, a lot of downloads on that one because he is covering hot topics and discussion subjects. So yeah, if you haven't listened to that, then we would advise you to go back and have a listen to that one. But as Curtis has said there, we'll include a snippet. And finally today, just at the end or towards the end of this week's headlines, we've got a recording from our mental health and wellbeing guru, Steve Whitten, who's recorded live from down at Auto Mechanica. So he's sharing his thoughts for the Men Able Moments this week from a show that he's down at the NEC there. And it's all about the aftermarket, the body shop market, etc. But he's talking about what we should be considering now with mental health in the current position, in the cost of living and things like that we find ourselves in.
And if you'd like to get in touch with us, come on the show or send us a press release, then just email us at motortraderadio@yahoo.com. You can also join the Motor Trade Radio LinkedIn group or follow us on Twitter.
So headlines this week, we've got a couple of big ones, haven't we, to begin with, Curtis?
We have, yes. Now, the bank holiday weekend, as it fell, possibly one of the biggest stories this year actually broke. So we'll start with that in a minute. But headlines this week are car dealership Carzam blames demise on Cazoo's share price collapse. That's from the Times. And closely linked with that story is our second story today, which is Cazoo founder lays out savage cuts to online used car dealer in investor call. We'll also look at May registrations, which have just been released by the SMMT. As you mentioned, we've got that exclusive from eBay Motors Group looking at used car trends also for May. And final story this week, Cox Automotive warns dealers to buckle up for difficult second half of the year. So plenty to get through today.
There is. So as you say there, Curtis, the story of the week really is the one that you referred to there in the Times. And car dealership Carzam blames demise on Cazoo's share price collapse. So this is with Pete Waddell talking there to the Times about the collapse of Carzam that has gone into administration, unfortunately, and they were obviously one of the rivals to Kazoo, weren't they?
They were, yeah, and it's an interesting piece. This ran on Thursday last week, and it was picked up and covered by Car Dealer. But if you want to see the original comments, in some detail, do head over to the Times's coverage. So yeah, this is really a roundup of what's happened there. So Carzam, as you know, launched 18 months ago by Peter Waddell and alongside John Bailey, former boss of Mannheim. And together they invested £50 million in the company. However, the business has now entered voluntary receivership. Now, Peter Waddell, in the interview with the Times, he said that Carzam could not raise funding to expand after the shares of Cazoo, which potentially its biggest rival, slumped since floating in August last year. So he's blaming it fairly and squarely on that fall in share price, because he goes on to say we couldn't get any further funding because share prices in Cazoo and Carvana, which is the other American rival, went down 85%. Now, he goes on to say if Chesterman had done his job and kept going and the shares had rebounded, we might have had the chance to get some money. Now, we talked about this before recording, and I made the observation that it's pretty unusual for the boss of a business to blame a competitor
Mm.
when the business fails. I mean, I've worked in automotive long time. I've worked in other industries, and I've never actually known it to happen before.
No, no, it's normally they stay a little bit quiet, don't they, on these kind of things? But yeah, it's there in the Times, and as I say, he's not wrong. Obviously, the shares prices, as we've discussed, and we've obviously seen across the media in the Kazoo and the Kavana have been struggling over there in the US. Share prices of UK businesses have been fluctuating, but they've still been on a significant bounce back since the start of the pandemic, haven't they? I mean, most
Yeah.
UK share prices have held pretty well since the opening of the businesses, year before last, isn't it? Now I can try and get my years right. It's been that weird couple of years there, Curtis. But
Yeah. It's about 18 months
yeah, it
now.
is. Yeah,
Yeah,
but
yeah.
I think there's it's a challenge. I think and we were talking that as we said earlier, that we thought that Kazam was probably because they had some fantastic leadership there at Kazam to make it work, and there
Yes.
were obviously a potential opportunity to rival Kazoo and the others that operate in that sector.
Yeah, definitely. And unlike its immediate competitors, Kazoo and to some degree Cinch, this was very much an industry-led business. Peter Waddell, John Bailey have long track records in the automotive
Mm.
sector. And if an online disruptor was going to succeed, they looked as though they would be more likely than maybe some of the others. So it is a bit of well, it came as a bit of a surprise when it was announced. Within the piece, it does make clear that Big Motoring Worlds, Peter Waddell's business, other business, will continue. That's totally unaffected by this closure, and that's where his focus will be now.
Yeah, and didn't we see recently? Has his son recently set up a business as well? Pete Waddell's son.
Yeah, there was some social media coverage of that last
Yeah,
week.
yeah.
I can't remember what the business is called, but it's a standalone supermarket, I
Mm.
believe, multi-mark car supermarket.
Yeah, and I know that there's a in the Times there it says that Chesterman declined to comment, so we don't know what their view is or their take on this is. But again, it got some significant coverage, and it's probably the headline of the week. But as you said there, Curtis, car dealer did cover this story, but it was obviously citing to the Times there. But going over to car dealer, actually, they've got this that says in detail. Cazoo founder lays out savage cuts to online used car dealer in investor call. So this is with Alex Chesterman there saying that they are going to be making some significant cuts across the business of Cazoo. Some of that is obviously in terms of redundancies, but also it's sort of we're not quite sure whether it's the shutting of some of their subscription or the suspension of some of the subscription sort of growth plans that they had in place for that area of the market.
Yeah, it's an interesting story, this, and definitely worth looking at on the car dealer website, because it is fairly detailed. So it's their report of the investor call, so which involved a 40-minute presentation from Alex Chessman and CFO Stephen Marana. And they did say that the firm will be cutting back on its expansion into Europe to focus on the UK, because that was very much what
Mm.
it was looking at, and the expansion into Europe was central for the growth of the business. But they've made it quite clear that they will now be focusing on the UK. And you mentioned the car subscription services. So within the story, it says the pair confirms that Cazoo will be running down its cash intensive subscription model, which has seen it invest tens of millions of pounds building it up through acquisition. Because it's not that long ago, certainly within the last 2 years, that it bought Drover, the UK subscription business, which was a good little business. That was growing steadily, and it also bought a business in Germany called Cluno,
Yeah.
for an undisclosed amount.
Yeah, and obviously on top of this, as well as the sort of that running down and the redundancies, they are talking about site closures as well. So I think they're looking at closing the customer centre there at the ring road over in Leeds and reduce its support at the centres down to one single site down in Southampton. So bit of a reverse this because we obviously talked recently when we were referring to these disruptors where the physical businesses were going into the digital space and we had digital operators going into the physical space, and now he's actually closing some of his physical footprints across the network as well. And obviously on the back of this, as you say there, I mean, no doubt they've been throwing a lot of money at branding, at marketing, across many different sort of industries, haven't they, and sport and
Yeah.
events. And they're talking about that's going to be slashed and pull back on that. So yeah, we may see a little bit less branding from Cazoo going forward in the short term.
Well, as an aside, over the bank holiday weekend, I found myself watching the Derby, which,
Oh yeah,
of
yeah,
course,
yeah.
is the Cazoo Derby. And when they were presenting the winning jockey, there was Princess Anne doing the main presentation, and there was a fellow standing behind her with a big beard. He looks though he was auditioning for ZZ Top, but it was Alex Chesterman
Right.
in the flesh.
So I mean, without going into taking over the whole podcast on this, we would urge you because it is a very, as and Car Dealer have done a great report on this, and I would urge you to go over to Car Dealer and check it out, because they do cite a lot of the content that Alex and the leadership team had presented at that briefing there around what they're doing, why they're doing it, what the plans are, some around that financials there. And it does include, obviously, talking about the market in terms of its downturn. We know that Alex has been talking about a potential recession in the UK, and it's been muted, obviously, some of the European markets. So, it's a very in-depth story there by Car Dealer Mag to look at. So I'd urge you to look at that if you've not seen it already.
Yeah, most definitely. And a point you made, and it's worth reinforcing that there are job losses associated with this restructuring at Cazoo, and also the closure of Carzam. So it's not a good time at the moment for job losses, and we do wish everyone well who's affected by those losses.
Definitely. And now we're going to go over to an extract from our longer conversation with top industry analyst Steve Young, as we mentioned earlier, who is the MD at ICDP.
Turning to agency, and you recently talked about the growth of multi-branding, which you acknowledge has been with us for a long time, especially in smaller towns where add-on brands make a lot of sense. We've seen that with the emergence of MG. We saw it with Mitsubishi, and to some extent with SsangYong. But that multi-branding, that covers some of the bigger sites with the related brands. We've got BMW and Mini side by side, Renault and Dacia, JLR, and now the Stellantis brands coming together, which you call the Stellantis house. So, what's your take on how agency will impact multi-branding?
Well, the agency forces the manufacturer to take more note of the fixed cost of the network, because anything beyond the basics they need to fund, and they I'm not suggesting that they're not sorry, let's try that one again. The agency will put more focus on the fixed costs of the network, because the manufacturers have to fund at least the brand related elements of the dealership, or of the new car side of the dealership, and that is going to encourage them to think differently about how they can reduce that cost. It's a significant part of the total network operating costs is coming from the facilities, and if you're negotiating the prices centrally, or setting the prices centrally, then it follows that you perhaps got more flexibility to treat the agent as being sort of the order taker, rather than somewhere where the customer is genuinely shopping around and making choices and making decisions. And that will is encouraging them to think more about multi-branding. Mercedes have already indicated, in the UK dealer discussions, that they're open to multi-branding. And when you look at the size of the Mercedes facilities and the number of the Mercedes facilities, then either you need to cut the number down significantly, or you need to reduce the square meters per site. And one way that you can reduce the effective square meters per site is by multi-branding. So that's at the heart of it, but that's not exclusively a function of agency, because the networks are too big, the facilities are too big, the standards are too high relative to the real customer needs. So whether you talk about agency or you talk about modifying the franchise system, then getting cost out is important, and multi-branding is one way to do that.
And staying with agency, I mean, we recently interviewed Robert Forrester, boss of Virtue Motors, and he said he's got no qualms about agency. and he'll introduce it with Cupra and Mercedes, saying he already does it with, obviously, as you and I know, parts departments do run under an agency model in many ways, and leasing. And what do you see as the main argument for and against agents, especially in the UK? I mean, you've just touched on a couple of points there. I mean, Robert alluded that he would welcome it. He's quite happy, but also he's quite happy that he's comfortable with the long lead times and shortage of supply at the minute as well.
Yeah, I don't think we want to have a shortage of supply. We want to have the right level of
Mm,
supply, and that is, perhaps when normal um, market conditions return, in the sense of manufacturers have the flexibility to decide how many to make, as opposed to making absolutely everything they can and it's still not enough, then agency is a way of forcing the discipline on the manufacturers to operate in a more disciplined fashion. And so, to me, that's probably the number one reason. It clearly helps with omnichannel. It helps if you've got consistent pricing across the network, across the um, online and offline, the transparency of the data on the customer journey, so the customer experience is much better, and you can focus on um, positive aspects of the sale, rather than the negative ones of trying to find some happy medium between what the customer thinks he's going to get because of what he's seen from CarWow or some other source, and what the MSRP is and what the dealer's initially asking. So we think it's better for the customer experience, but I think the main thing is it forces the manufacturer, because they are responsible for the inventory, um, because if they don't manage the pricing well, they're going to end up with either lower revenue per unit or um, higher inventories than planned, all backing up, and all the challenges of disposing of that in an orderly way. It will force them to be more disciplined than they have been in the past.
Well, pretty much everything you needed to know about agency model there, but we're afraid to ask.
yes, definitely, definitely.
Straight from the horse's mouth.
Yeah, it was again cracking interview there. So do check that out if you've not listened to it already. And Steve is a regular to the show now, and we will keep trying to sort of get him to discuss some of these broader subjects on a regular basis.
You're listening to All the Chat That Matters on Motor Trade Radio, powered by eBay Motors Group. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand wherever you are on your podcast feed.
So heading over to AM Online now and talking about the new car results that came out at the back end. Was it this week? I think it was this week. You're losing week.
It was only this week.
Oh,
Yes,
this
seems a
week.
long
Yeah.
time ago.
It
Yes,
does seem a long time ago this week, but yeah. So Monday of this week, we got the new car figures were published, and May delivered its lowest new car registration in 3 decades. So again, a significant downturn there, down to 100 and just over 124,000 units there in the month of May. So, that's down 32.3% in against the pre-COVID pandemic levels of 2019. So significant drop off there, Curtis.
yeah, it does make for some painful reading here. So year to date, private was down. Private was actually up 11.4%, taking a 54% market share. But we can see where the losses are coming from. It is very much led by the fleet sector, which was down 26%, accounting for 43.4% of the market in the year to date, while the business sector to fleets of less than 20, is it 20 or 25 vehicles? Can't remember. That was up 13.5%, taking a market share of 2.3%. But as I say, very much led by fleet, which was actually down by 30% over the course of May.
Yeah, and we know that that we've got the challenge with what's happening in the cost of living. We know that the pressure that's taking place in that consumer confidence index at the minute being down to -40. So we know that there's a lot of pressure out there in the market. So I think it was. We knew that the figure wasn't going to be great for the UK. But quite interestingly, though, when you start to look at some of those European markets, there's a lot of variance coming in now. So I mean, France was down only 10.1%. Germany was down just over 10.2%. And then you look at Spain there, and they were down just over 10% as well. So, the UK would perform pretty poorly in comparison in terms of percentage terms. We're down just over that 20% there. So a lot of pressure in the market at the minute, still continuing across the sector with supply. And I know the manufacturers are clearly trying to focus on, productivity where they can. They still keep chasing, challenges there. And, we talk about the cost of living later on, and that fuel price at the pumps that we're seeing now on a daily basis. Well, that goes into manufacturing as well, doesn't it, in terms of all these
Yes.
raw
Yeah.
materials and costs. So, yeah, a lot of pressure there, but still some upbeat performances from the EV sector, though, isn't there?
Yeah, yeah, definitely. And I tell you what really caught my eye, and I know we've mentioned this before, but the Ford Fiesta, which traditionally is the UK's best-selling car, not only was it not in the top 10 for May, but it's not actually in the top 10 for the year to date. And this can only be attributed to the Fiesta, I guess, going to the back of the queue for chips. Ford is prioritizing other vehicles with better margins. So the Fiesta has actually dropped out of the top 10. First time I've
Yeah,
seen that happen.
yeah. There's a lot of changes going on there, and I think those that do listen to what's happening in the global market, I think Ford are under a little bit of pressure. I think this week after a recent strategy event
Yes.
that
Yeah.
they shared some of their views, and particularly I think under some pressure from the US Ford dealer market there at the minute. But that's for another day, and it's all connected to agency model as well, and Ford direct selling. So yeah, you can see where they've got a few problems at the minute.
It's funny how agency models seems to touch an increasing number of stories that we cover.
It does,
It's
yeah, and I mean, everything's interlinked to agency, isn't it? That's
yeah.
that's the thing at the minute. The direct selling, the EVs being sold online, etc., etc. It's getting a bit murky out there, should we say, more than ever.
Now we've got some exclusive data that, as we mentioned at the top of the program, from eBay Motors Group. So it's their May market view, which is their monthly analysis of trends in terms of advertised prices, days to sell, and stocking levels. So if we look at the prices first, because I guess that's very much the headline figure that a lot of people are looking at. So the average price for May was £16,872, which was down 2.1% on April. So pretty much tracking what we're seeing in the wholesale sector, and certainly from our recent conversation with Darren Martin at Cap HPI, where those wholesale values are coming down, and we're now starting to see them in the retail sector, because this is actually the fourth consecutive month of price drops. But 2.1% is the biggest we've seen so far. And looking at the individual sectors to see where that price movement is coming from. I mean, it's very much led by the car supermarket sector, where prices were down 2.5% to 16,890, followed by the franchise sector, which was down 2% to £19,992, while the independent sector was down just 0.9% to 14,708. So again, it's very much led by the car supermarkets sector there.
Yeah, and interesting when you start to look at the days to sell. Not much movement really, but very much slight difference there when you start looking at the franchise. So the overall days to sell is 36.7 days, and that's down 4.8% month on month, and down 6.5% on the year. And then when you start to look at that from a sector sales channel perspective, car supermarket, they are down to 28.1 days compared to 28.3 in April of this year. But compare that to 34.2 days at this time, May of 2021. Whereas franchise dealers, 31.2 days in May of this year, and that's against a 35.5 days in April of this year. But that's again compared to last year, same month at 34.8. Independent, very minor movements in month on month for independent, but quite a big one year on year. So May of last year, their average days to sell was 49.7 days. In April of this year, that dropped down to 45.6 days, and only a slight drop now this month in May of 45.3 days. So a little bit of sort of variance there starting to creep in between the car supermarkets, the franchise, and the independent dealers, as you were referring to on the price markers.
Yeah, and finishing off with a look at stock levels. So stock levels for the month average 46.1 units per site. And that's actually pretty much on a par with April, which was 46.8. And at least 4 units, well, three and a half units up on this time last year, May 2021, when the average was 42.8. And it's worth looking at the different sectors, because there are some interesting trends here. Within car supermarkets, the average site was down by 10 units, so that was down from 303 to 293. Franchise sites were down 2 units to 56, and independents pretty steady. So 36 units, exactly the same as last month, and 3 units up year on year. So there seems to be a lot of stability there in the independent sector. Certainly when it comes to pricing, vehicles in stock, and days to sell.
Yeah, definitely. And as you know, as always with this will be available, I think, from Monday. Is it, Curtis?
Yeah, certainly early next week. I'll send it out on social media, but yeah, do head over to the eBay Motors Group website, because the market view is very detailed. There's a lot more data in it than we've just discussed, and it's a great way to see what's actually happening in the used car sector there.
Yeah, definitely. We'd always urge that, because it gives you a good insight that's happening outside of your business that you may not get the view of, and you may be thinking that you're underperforming. Well, you actually might not be, and there is some interesting when it starts to sort of give you some detail around the fuel types and the model types of where those inquiries are and pricing, etc. So we'd always urge you to take a look at the full report when it becomes available, as Curtis says, early next week.
And the final story this week is from Car Dealer, and the headline is Cox Automotive warns dealers to buckle up for difficult second half of the year. So this follows on quite neatly, actually, doesn't it? From we've looked at the May new car market and the May used car market, and this story talks about dealers should buckle up for a tough second half, with Cox Automotive saying that both supply and demand are both falling after experiencing record-breaking highs during the pandemic. So, what are the main points that for you of this from this
Yeah,
report,
I think this sort of
Phil?
links into some of the conversation that we started to talk to Steve about on the last week's show, where the network's had a very good time. The dealers have had a fantastic period of time. We've seen a lot of we've reported on a lot of the financials, haven't we, from many of the dealer groups and the sector. But I think now, the market is getting a little bit tougher. Reports are now coming out that and it's a broad brush, this one, so I'll apologise in advance to those listening. But some believe that we've been in a market where it's not been very difficult to sell things. With that service history or that little bit of damage on a car has been missed. it's still found a home because there's the high levels of demand against the low levels of supply. Well, it's just a view that at the minute it is getting a little bit tougher out there. Demand's a little bit tough. Cost of living is creeping in now. A lot of detail now around price, type of vehicles, and just as you've alluded to there, Curtis, was some of that market view stuff from eBay Motors Group. There's a lot of complexity now starting to enter the sector. So, and we just believe that it's going to be a little bit of a tough second half of the year. Supply is not coming through in any kind of significant volume, but demand is just starting to get a little bit tougher. People are tightening up a little bit. Value seem to be holding okay-ish. It's not a crash, obviously, at all, as Darren alluded to on his interview recently from Cap HPI, but it's just getting a little bit challenging out there. And it's a case of, I think we talk about back to basics, and this is an overused comment across the industry, but now's the time to just make sure that you're buying things at the right money, condition, spec, description, everything is right. Just to make sure that you keep a close eye on things as we enter this second half of the year.
Yeah, so a bumpy road ahead.
Yeah, I won't describe it as a hurricane. I think we need to be careful on the terminology of this, but I think it's just going to be a challenging period of time ahead that we just need to keep a close eye on it. But you and I have been in the industry long enough, unfortunately, Curtis. We won't say what our combined time in the industry is.
We did work it out, didn't we?
We did, yeah.
Quite
it shocked us, yeah. So we won't say that, but we've all been through it. We've been through the tough times. We've recovered. We've been through the recessions and the financial crashes and come out the other side. The one thing is for the industry, they are a resilient bunch, aren't they? We've seen that. Just even the stories we're talking about right at the start with the disruptors entering the marketplace and how the dealer market has reacted to that. So it's just going to be that little bit of buckling in, get tight, and just keep the back to basics a little bit and watch the detail now for a period of time.
In fact, one of the headlines that really caught my eye this week was it was along the line of the established dealers proved to be the best disruptors in the business. So for anyone listening today, that's you. That means you. So,
yeah, there's a lot happening.
So anyway, yeah. Definitely, and now we're going to head over to our regular Men-Able moment from our very own automotive wellbeing guru, Steve Whitten, who's reporting live from the Automechanica show at Birmingham's NEC. Over to you, Steve.
Hi, Phil. Hi, Curtis. Good to be back with you for a Men-Able moments. Feet haven't touched the ground this week. Well, actually, they have touched the ground quite a lot because I've been at the NEC for the Automechanica Garage and Body Shop event. 2 days this week. I am actually here right now, and that's why you can hear there's a little bit of a buzz in the background because it's busy. And I've got to say, it's fantastic. What a great event this is. And what's also good about it is that the guys and girls that are at this event really are the bedrock of our industry. They are the service people, or if in the States, the fixed ops people. And they're just great. They're lovely, they're friendly, they're interested, they're engaged, they're looking to the future, interested in what's going on. Lots of independent garage owners, lots of techie people, as you might imagine. But, of course, what we should be talking about as well is the whole sort of well-being of that group of people, along with everyone else in the industry, of course. And what I can't help thinking about this week are the headwinds that we are facing. Now, we can talk for ages about all sorts of technical stuff, electrification and automation and so on. But we have a far more fundamental headwind coming our way, and that is the well-being of our people. Now, I've got to say, and I'm sorry it sounds like a bit of a moan, I was sitting in an event at one of the talks yesterday, and the previous one was all about electric vehicles and hydrogen vehicles, and it was rammed to the rafters. That talk finished. The next talk was all about people, and the room was half full. And I was quite disappointed, if I'm honest, that I thought managers and leaders really need to start thinking about your people, because your people are at the coalface, at the front end of what's coming your way in terms of these headwinds. And that conversation there, also, one of the things that was talked about was gaining and retaining staff. And Gavin White, who's a great friend of ours and one of our Menable members, he actually made a point about, how reactive we can tend to be in the industry, that, a service manager will leave a business because he needs a £5,000 a year pay rise, puts the business then in the position of going to a recruitment agent and spending then £6,000 on finding a replacement. And can't help thinking, well, isn't that a tad short-sighted? And actually, the surveys that everyone shows really do reflect that pay is not high on the list of the reasons why people leave a business. It's recognition, it's feeling wanted, it's feeling part of something, belonging, feeling that there's a purpose and that things are communicated well. Now, when you throw in the mix, the thing that we're all seeing right now is the cost of living going through the roof. I even noticed the other day in Aldi, and yes, I've started shopping in Aldi. Never know when you're fresh out of MIG welders. But the cost of my favourite jar of marmalade has gone up by 25 pence. And I thought, do you know what? That's not a problem for me. But if I was running a small family and I was on a fairly low salary and I was stressed off the clock, these increases would make a massive difference to me. And so it's time for us to have a little bit more empathy about, what's going on for some of these guys and girls. And also to think, if I do genuinely have people leaving me for an extra 50p or £1 an hour, what is going on? Because yes, it's the financial side of it, but there could be other stuff that's happening within my business that I need to think about that's causing these issues to be magnified by this cost of living issue that's coming our way. Now, I know the business leaders are all going to be facing this stuff as well, but it's really being here for a couple of days has given me the chance to reflect on how that affects the people at the ground level, as I said, the bedrock, the foundation level of our industry. So I'd ask you to have a think about that, because that all obviously affects well-being and, the mental health of people like that. If they're juggling stuff, if there's a lot of stuff going in their bucket of overwhelm, it won't take much for one more thing to trip them over it and for that to start overflowing. And it could be cost of living, it could be the way they feel that they're being treated at work or looked after or not looked after or whatever. Now, my final thought on this is actually, I also raised a question on this panel conversation yesterday, and that is, what do we need to do for leaders? Because I'm very conscious that I'm at the other end of my career and in an age range that means that actually, to be fair, I've grown up through the industry without necessarily getting a huge amount of education and development in dealing with this stuff. So it's very easy for us to point all of the fingers at leaders and managers and say, this is your problem, but we've also got to take time out to think, actually, what do we need to do to help and support them? And is that training? Is it development? Is it well-being check-ins? Is it making sure that those guys and girls that are running these businesses are also equipped to deal with literally what is coming down the line? And I don't want to be doom and gloom, because as we've said before, we want to celebrate, mental health and where we're getting and so on. And we are a fantastic industry. My thoughts on that. But it is fairly well noted that we are probably facing a second half of the year that's going to be tough. So let's start thinking about some of this stuff. So there you go. I did say feet hadn't touched and where to start with all of this, but hope that resonates and makes a bit of sense. As always, you can get hold of me, action@menable.org, or funnily enough, I might be on LinkedIn as well. Many thanks again, guys, and we'll catch you later. All the best. Bye.
Well, he never lets us down. It's like you read our headlines, Curtis, this week, and
It
he
is,
didn't.
yes.
But yeah, I mean, he's right. I mean, again, I think we'll have to start thinking of some upbeat stories for next week. We've been a little bit doom and gloom and criticising our sector this week, which as Steve said there, it's not all doom and gloom. We should be celebrating a lot of the stuff. I mean, bringing it back to some of the earlier stories. I mean,
Yeah.
the performances that we've been announcing recently on the headlines have been fantastic, haven't they? But I think he made some valid points there that sometimes we don't look for the long term. We look at the short term, and he makes a point there about people leaving for, a few pound an hour or a few £1,000 a year that aren't actually leaving for that reason, or they may need to
Yes.
leave for that reason because it's a case of putting food on the table in these difficult times that we find ourselves in. So making some valid points there is Steve, as always.
Yeah, and Automechanica, it really is a great event. And Steve did mention that he is on LinkedIn and Twitter from time to time, and he did actually post a lot of content from Automechanica, because for Steve, it was just such a good opportunity to go around and talk to people. And the feedback that he's getting from Menable is incredible now. So that must have been very gratifying for him.
Yeah, no, it's a fantastic event down there at the NEC. I mean, they are, as Steve put, they are the backbone. These are the guys, the suppliers, the aftermarket, the body shop people, etc., etc., that are keeping the industry going in most ways. So, great for him to be down there and networking with those people down there. So again, thanks, Steve, for doing that whilst you were down there. A little bit noisy. I think I'd rather hear the sea and the birds and that kind of thing from his other one. But yeah.
We'll have to send him on holiday again.
Definitely. But that's kind of it for this week. We've a jam-packed show there. Lots going on in the sector as always. And just to say that the three bits really is do listen back to the Steve Young interview. As we keep saying, very insightful interview there with Steve Young from ICDP on all things happening in the sector, particularly on agency model, the hot topic at the minute. In-depth, detailed overview there in Car Dealer Mag on the position with Cazoo, and obviously talking about the termination or receivership of Carzam there. And then obviously the eBay Motors Group market view report. Don't miss that one when it's out, and I'm sure you'll see it on Curtis's social feeds when it is available. And I would urge you to go and check that out and check some of the detail on that. So again, great week again, Curtis.
Yeah, and that is all for now. You've been listening to the weekly Motor Trade Radio podcast powered by eBay Motors Group. Many thanks for joining us for all the chatter that matters. We're back again next week. Until then, it's goodbye from me.
And it's goodbye from him.